Welcome to the end of the road as Accounting 2302 finishes up the homework with Chapter 12. Here's your host, Professor Naragon. Hi, how y'all doing? I am back bringing you the latest and the greatest of Chapter 12 as the road finally ends for our course of 2301. So again, we end up dealing with cash flows. So of course you have lots of videos that we like to do to get you ready for this chapter. But jumping into chapter 6, not chapter 6, question 6. This question wants you to either put in operating, investing, or financing activities, judging by the cash flow. And cool thing is with Connect, you only have those three options. So what we do want to do is get into the ebook if you want to and actually look into how they change, or go back to the notes. If you are on the hinge, either one, you can always hit check my work. So first off, when we look at investing and financing, we're probably going to look at any gain or sell from the actual product, fixed asset. Financing, we're probably going to look at issuing of debt or any long-term. So our retirement of that. So starting off first, receive cash from the sale of property at a loss. Now that is an investing activity, but sometimes Connect may actually change it up a little bit. This one it's not. Same thing, receive cash from the sale of equipment at gain. That's investment, that's a fixed asset. Paid cash for rent. Well, that's in our everyday life. Paid short-term debt. When we retire debt, that's part of financing. Paid interest on the debt. Now, we did pay interest, but this is considered more of an operating activity. This is still everyday stuff that happens in operating. I mean, could be any debt. So, issued preferred stock for cash. That's a finance. We issued out stock. Paid accounts payable with cash. Of course, that's operating. Received cash dividends from investing. Now, Connect's going through that as an operating activity. That could also fall into investing, but for Connect purposes, it's going to be an operating activity because it's part of our normal day. Apparently, this is more of an investment client. Okay, paid cash for a building. That should be investing, and then paid long-term debt with cash. Now, since it's a long-term, we're going to put that with financing and see what Connect gives us. And it is financing on that one. Again, we retired debt. Okay, so not much to that one. It just wants you to get the overall picture of how these transactions, where they fit in the average flow of cash flow in itself. So 7, bring some fun. Okay, so 7 starts with basically our operating. Okay, and I will tell you 7, 8, and 9 are just going through the 3 sections. Of course, 10 is going to be our big bad boy. So with 7, we're dealing with operating in itself, and it's going to have everything right here of what we really get rid of. Well, basically nothing's going to change. We have to deal with depreciation. We're going to have to deal with accounts receivable, inventory, and of course also, well, let's put accounts payable since that was next, and accrued liabilities. Nothing's going to change there because all these are currents. Okay, and depreciation expense itself, but all these are current ones right here. Okay, and in the end, this is cash provided or by used for operating activities. Alright, Starting off, depreciation expense. And notice this would connect. The amounts need to be deducted should be indicated by minus signs. Okay? So here, depreciation is always added back. So for each of these cases, we add back. Okay? And you'll notice connect at the bottom is actually going to deal with a little bit more of putting it down here. Okay? That's already doing the math for you. All we're doing is filling it in. Okay? Next one, accounts receivable. Notice it indicates an increase with a positive, decrease with parentheses. So what's this? When we're looking at operating and it's a current asset, it's going to do the exact opposite. So an increase is actually going to be deducted, while a decrease is going to be added. So here we have 59,300. That will have to be deducted because it's an increase of a current asset, 29,500. Again, the reason why behind here is that this is actually affecting net income, but no cash has really taken place on these aspects, and it just increased. So in order to get proper amounts, we have to basically remove an increase of a current asset. Now, we decrease because cash is finally paid and we're actually recognizing it. So in a cash flow, we're going to increase it for accounts receivable. Okay, or basically a current asset. So again, inventory, it's a current asset. Both of these, they went down, so we're going to add those back. So 29,800. This was 14,900. And then notice on this one, we actually have inventory that went up, so that has to go down. Okay. Now, cool thing with liabilities though, when they're a current liability, they follow the same rules. So if it increases right here. Okay, 35,700, and that means this one is going lower by 65,500. Here we have 32,900. It decreased, but increased by 1,800 or 18,000. I don't know why I'm saying 100. This increased by 2,800. And this decreased by negative 11,800. Alright, so let me zoom out so you can see the charts. So here they are again. Assets, they do the opposite of the increase and decrease, while liabilities stay the same. Again, hit check my work, everything's good. Okay. So that's the only thing to really watch out for when you're dealing with operating, is what increases and what decreases. As long as you remember that current assets do the opposite. If they increase in the comparable years, we do the opposite, you're good. Again, we're trying to get you just the basic principles of cash flows. If you're an account major, you get to deal with this in the intermediate. Okay? But current assets, they do the opposite. Current liabilities, they keep the same. Okay? Alright. Question 8. So, I want to zoom in just a little bit. Okay. So, question 8 wants us to compute the cash flows from investing activities. Okay? So, this is going to deal with basically any investments. So, sell or purchase of investments, or purchase or sell of a fixed asset. So looking at here, and we know it's going to use the sell because that's the sell of an investment, and then it's going to use this purchase. It's not going to use cash collected from customers because that's a current asset, so that's dealing with the operating. And it's not going to deal with depreciation expense because, again, that deals with operating. So here, let's go sell of short term, purchase of equipment, and the sell of the short term says, when we sell, we get money, don't we? So since we're getting money, we increase. But when we purchase, we lose money. We basically trade our money to get that equipment. So that's going to be a loss. Now, again, Connect's going to throw you an extra blank. Do not get fooled by it. And this is all cash provided by investment. Check. Everything's good. So watch out of how the cash flow is going with investing. And remember, that's only really dealing with purchasing and sales of fixed assets or actual investments in other companies. Okay. Let's head to question number 9. Alright. So now we deal with financing. Okay. So following financing activities. So let's just start off. Cash provided by financing activities right there in the total. Okay. Because it's all financing activities already. Okay. So all we're going to be looking at is probably dividends being paid. Anything dealing with dividends. And the difference of anything that's really a borrowing or borrowing money from people. That's a good financing right there. Here we see purchase of short-term investments. Again, that's when we are investing into somebody. And interest paid is an operating activity. So that only leaves additional and cash dividends paid. And again, we just look at how the cash is going. Well, if we're borrowing more money, that means cash increased by $31,000. But if we paid out dividends, that means cash decreased. So again, investing and financing are the easy ones. It's only the operating that's going to be the bugaboo. Okay? So, looking at question 10 in itself, here's everything. Okay? So, this means I'm probably going to have to get to the calculator because I'm probably going to have to do some comparison, as you can see. But this is going to take everything we just learned and put it all together. Okay? So, as we can see, we have our balance sheet, and it's a comparative because we need a comparative. And we also have our income statement. So, an additional information right here. The loss on the cash sale of equipment was $11,125. Details in B, which happens to be right here. Sold equipment costing $64,875 with accumulated depreciation of $36,125 for $17,625 in cash. Okay. We purchased equipment costing $102,375 by paying $42,000 in cash, signing a long-term note payable for the balance. Okay. Borrowed $46,000 cash by signing a short-term note payable. Paid about $53,125 cash to reduce the long-term notes payable. Issued 3,100 shares of common stock at $20 cash per share, and declared a paid cash dividends of $51,300. Alright, so lots of stuff going on right there. Let's just start pacing out one by one. A lot of this is dealing with investing or financing. Not too much that we really need for our operating. Okay, so we're going to start with our operating in itself. As you can see, there's over here. If you want to go ahead, you can fill in cash balance at the beginning of the year. So, okay, so right here, we know cash balance at the beginning of the year is going to be right here, cash, the 79,500. Okay, not going to change there. Okay, so that's starting off. We know our ending cash balance at the end of the year needs to equal out to 58,900. So, first thing we start off is our operating is going to be our net income. If there was actually a loss, we would do net loss, but it's going to be net income because that's what the income statement comes out to. Okay, as you can see, income statement of 112,575. Alright, so a lot of this extra stuff right here we can pull mostly from here. So watch out for this. Okay, so again, 112,575. Okay, and as you're going to see, it will flow through. If you want to just keep an eye on how the number is going, you can. Works the same way. So I'm going to actually go a little bit back from this. Okay. So here we know first one is always going to be depreciation. Okay, always going to do depreciation first. Here it's 26,750. And we know that's going to always add. Okay, always add in our depreciation. Okay, then we're going to look for any loss. Okay, loss or gain. Okay, remember, if it's a gain, we subtract. If it's a loss, we add. Okay, so loss and sell. Where is it? Loss on disposal. And we're going to add 11,125. Okay, and of course, again, you can always hit check my work if you want to do it that way to keep an eye out on how you're doing. Alright, so that's all I have with the income statement. Okay, other expenses I'm not worried about because again, that's probably true. We usually wrap them up with our actual balance sheet. So now we're going to look at increases and decreases. Okay, we're going to look at current assets. The cool thing with this problem, look what it does. It tells us total current assets already. So it already gives us cash, accounts receivable, inventory, and prepaid expenses. So we never deal with cash since that's what we're already dealing with. And we're going to look at the other current. And we have 3. So first, see if there's an increase or decrease. So when we look at accounts receivable from 16 to 17, it went up, so it increased. Inventory increased, but prepaid decreased. So for connect, it's going to actually ask you if this increased or decreased. Well, accounts receivable increased. Inventory increased for this problem, and prepaid, there we go, decreased. Okay. Next, let's look at liabilities. And again, this problem already tells you current liabilities, and we got accounts payable and short-term notes payable. Alright. The short-term notes payable, that is a current liability, but that favors more of a financing item than it does actual current. Okay, I mean for operating. Okay, it's more of a finance than actual and operating thing. So we know accounts payable is here, and that actually decreased. So if you actually did the short term, and as you can see it did increase, I'm going to tell you already that Connect is going to say that's wrong. And that's why they left it blank. So I'm going to even put it in here to show you. And it only really says cash borrowed on short term. That should immediately red flagged it that even Connect saying this is a finance item. Okay? Because it's not giving me the increase or decrease. So again, if you try and put that there, see, Connect does show as an X. So don't put it there. That's going to go into financing. Okay? There should actually be a blank. Okay? And net cash provided by operating activities. Alright. So remember this. Again, current assets is going to do the opposite on the cash flow statement than it does in the comparison. So these increases are actually decreases here. So they're going to be subtractions, minuses. And this decrease is going to be a plus. Accounts payable is going to be exactly the same thing. So this is a decrease, it's going to subtract. Okay? So we're probably going to have to pump out our calculator. So first off, dealing with accounts receivable, we have 74,830. And we're going to have 56,625. So it had a total increase change of 18,205. So down here, we're going to subtract 18,205. Again, because it does the opposite in current assets. Next, the change in inventory. So we have 284,656. And it's 257,800. Okay, so that had 26,856. Okay, now prepaid, we have 1,270. So it's good to actually probably print this out and do a difference column if it helps you out. Or you can just pump out the calculator. See, this also says it's a loss, or it went down. So we need to increase it by 745. Alright. Last one, accounts payable. We're going to find right here 59,141. And 123,675. Okay, so we have 64,534. Dang it. 64,534. 64,534. Alright, cool. So our net cash provided by operating activities is 41,600. So let's just check, because I would probably strongly suggest just check your numbers before to know that you're still on the right path. And we still are. Okay. Next, investing. So we're going to check out our fixed assets. Now, we know an increase did happen, and basically this is where this part comes in handy right here, because it says right here, sold equipment for 64,875. Okay, sold equipment costing not for. Here's the for 17,625. So that increased our cash that we received by 17,625. So I'm going to go ahead and put that in. Let's see, equipment, cash received, and that was 17,625. Okay. Next, we purchase equipment costing 102,375, but we paid $42,000 for it. So we only paid, so cash received, cash paid, and that's going to be $42,000 of cash for the investing. Okay? So let's see if we're doing alright. Now it's going to tell us it's wrong. Why do you think it tells us it's wrong? We paid the cash. So cash paid was $42,000, but in reality, we probably end up paid the $102,375, unless we have another cash going on. No. So that's not right either. So we've got a little bugaboo going on right there. Something's not right. So we must have paid something else, or we must have done something different. Okay, so let's get back to that one. Let's see. If we purchase equipment, okay, well, what's the difference right here? Let's see if they actually give us the difference. Okay, so 151,500 minus 114 equals 37,500. Okay, let's see if it's that. Still not. So that's a little curious of how Connect is trying to figure that out on us. So when we look at this, we did purchase equipment costing $102,375. We did pay $42,000 in cash and signed a long-term note payable for the balance. That one's a little bit curious. So we're going to have to check into that and how it works on that little part. Let's go ahead and move to financing, because that's a little off to me. That's really off. Well, let's knock out financing first, okay? Because usually when we can knock out financing, we can probably figure out the rest, the little difference, and see where that actually goes and where Connect is actually trying to tell you. Because it's not following along with what it really needs to follow along with. So let's start with cash flow, okay? So here, we should probably have cash borrowed for a short-term note. We borrowed $4,600, okay? Okay. We issued out stock, 31,000 shares of common stock for $20 in cash. So basically it's a combination of those. So 20 times 3,100. I'm actually curious of how Connect figured out that now. Alright, so 6,200. Okay. Let's see what else we got going on. We got cash paid on a long-term note, 53,125. Everybody's like going, oh, I know what happened. Y'all know? Did I forget to put negative? Hopefully y'all figured it out. Yeah, that's what really happened. You gotta remember those minus signs. Okay? So, hopefully y'all just remember that, oh, he just forgot the minus sign. Of course you gotta have the minus sign. Can't forget that. I was just seeing him eventually just throwing something in at the last minute. I don't know why. Because we can. I guess. Dividends declared. So we actually paid our complete dividends, 51,300. And that's in the wrong spot. Get out of there. I think. And that was again 51,300. Okay. Have we made it to 58,900? Is that? Yep. We found them all. Gotta catch them all. There is nothing else that really goes on. Because again, all we did was receive our borrowed money. And then we paid a long-term note. We received our stock and we paid cash dividends. So in the end, check my work. All of our numbers match. And it's saying answer is not complete. Boom, boom. Don't forget your totals. Okay? Because again, just showing you right there as an example. They're going to get you on those. So always have your totals in. Okay? Because again, Connect does not like to say what's going on. So let's see if everything's now in. Answer is complete but not entirely correct. That is funny in so many ways. Let me see. There we go. Used. Apparently they love that negatives to say used instead of provided. Okay? Still the same. It's just one of those funny little things with Connect. So answer is now complete and correct. And that is basically, again, a little slow. There's our operating, there's our investing, and there's our finance. So that's it for chapter 12. That's all. Okay, that's wraps up for accounting 2301. Homework. I hope y'all have a good one, and I will see y'all later. Okay, this is the ending of the road, the end of the adventure. Professor Naragon signing off.